Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of what FATCA, the Foreign Account Tax Compliance Act penalties are, what taxpayers can do to avoid them, and what to do if you find yourself in the matrix in order to minimize or abate penalties. FATCA is not the same as FBAR. You see the two acronyms kind of simultaneously everywhere, but they're not the same. FATCA refers to the Foreign Account Tax Compliance Act. It was introduced on the U.S. tax return back in 2012 or 2011. Since 2014, I believe the U.S. has entered into more than 110 FATCA agreements, which are otherwise known as IGAs, intergovernmental agreements, with more than 110 countries, and hundreds of thousands of foreign financial institutions actively report information to the U.S. government, which means if you're a U.S. person and you have accounts overseas, those foreign financial institutions report that information to the U.S. government. Now, when it comes to FATCA, it's more than just bank accounts. It's bank accounts, investment accounts, life insurance policies with a surrender or cash value, foreign pension plans, etc., stock accounts. With FATCA, unlike the FBAR, it's based on the form itself and not individual accounts, whereas with FBAR, sometimes they try to ding you per account. With FATCA, it's based on the Form 8938. So when someone fails to file Form 8938 timely, they could be subject to a $10,000 penalty. If they don't file it, I think within every 90 days, there's a continuing penalty up to $50,000. So depending on how many years of non-compliance there can be some significant fines and penalties. Again, it's not like you file a FATCA form for each different account or asset. You file one form per year. Penalty enforcement is on the rise. It used to just be soft letters like 6251 or 6291 where the IRS would basically say, hey, Joe or Jane, this foreign financial institution reported your information to us. We see that you've got 9 accounts. You haven't reported that, or maybe you've reported 2 or 3 accounts, and they give you a chance to get into compliance before hitting you with an audit or penalties. These days, we're having more and more taxpayers approach us who have received what's called a CP15 assessed penalty notice. With a CP15, it's an assessable penalty, which means you don't get the opportunity to dispute it beforehand. Instead, you open your mailbox one day, you probably have a certified letter saying you've been dinged $10, $50, $100,000, depending on how many years and how long you've been out of compliance for. The IRS doesn't really pursue criminal penalties so much for FATCA, but there have been some cases. I think there was a case back in 18 or 19 where there was a FATCA conviction, a criminal conviction. So it's something to keep in mind. In general, the chance of getting dinged with a criminal violation is pretty rare, so don't let anyone scare you with that. But it's something that could potentially happen depending on how far down the line you go. In addition to receiving 8938 penalties, they're not necessarily mutually exclusive to other penalties you might get, such as FBAR, Form 3520, 5471, 8865, etc., etc. If you're out of compliance and you haven't been penalized yet, there's various programs you can submit to get into compliance, depending on your situation. If you're willful or you're just not comfortable certifying under penalty of perjury that you're non-willful, you would submit to the traditional voluntary disclosure program. Otherwise, there's various programs if you're non-willful, such as the streamlined procedures, reasonable cause, and delinquency procedures. We have lots of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.